River, BC. How you doing, buddy?
I'm doing really well, Jaden. How about yourself?
Yeah, loving life. We got an interesting topic today. I think this is something that we get quite often when we talk to clients that are used to dealing with banks. And quite often the banks will say, "Well, yeah, no, those mortgage brokers work with alternative lenders, right?" And so, there's cost to go with those alternative lenders, and they're absolutely right. In some ways, there are, of course, we work with prime lenders across the board, including some of the big banks. And I'd say both of our books are probably 90% plus prime, 95% plus prime.
Yeah.
But we definitely see that there's a time and space for alternative lending. And so there's a ton of different reasons you would use alternative lending. Everybody thinks that it's just kind of for, that person who has bad credit or no credit or has had problems in the past, or, maybe has had a bankruptcy in the past or things like that. And absolutely, there's a time and a place for that. If you're in a financial situation now where maybe your credit hasn't really caught up to your financial ability to pay off a mortgage, but you have a plan in place, alternative lending might be a good way for you to get into a home. So there's a couple of caveats to getting started with that. And the biggest one that tends to be a barrier for entry for people who maybe have problems with their credit is that
Yeah.
you need 20% down right off the bat, right? And in reality, that 20% is 21%, because every kind of what we would call alternative lender, and this isn't a private lender, this is an alternative lender, would charge you a fee of 1% for the most part across the board, right? So you're looking at 21% just to get started with this. But there's some great programs with alternative lenders that kind of open up the market to borrowers, aren't there, Mike?
Yeah, absolutely. And just first of all, just so everybody knows that the banks have their sources of, we call it B, alternative B lending as well. So they do have options to send their clients through their sources, and
Yep.
most of those sources are other brokers or brokers that those banks deal with. So they have the options as well, but they don't have as many options as
Yeah.
we might have. So as brokers, we have options for obviously tons and tons of lenders for in the A channel, which is the typical best files, strongest credit, everything works fine. And we have lots of options in the B space, which is alternative. Jaden's been talking about. And then there's private money, which is beyond the B space, much higher interest rates, but way more flexibility. So we're going to talk a little bit about both. So for now, let's start with the B space, the true alternative lenders. And there's so many good products here. There's products that
Yeah.
for people that have become maybe just self-employed and haven't been self-employed that long or don't show the income, but we can maybe use some bank statements. They have higher debt service ratios, which means that they can push the envelope from what you can afford possibly, right? So, but you got to remember their interest rates are going to be higher than prime lenders. So the qualification is going to be higher. They also have longer amortization, some of them, so it helps you
Yep.
qualify. So in many cases, maybe people need to pay some back taxes, or maybe they've got some credit issues that Jaden was just talking about, or they're self-employed and we can't use enough income from them, and we can get a little bit more flexible with the B lenders. And then there's obviously the private money, which is there's billions and billions of private dollars out there, but you got to be very careful when you're getting into that. And I think Jay's going to talk a little bit about the spinoffs or the negative the cons, I guess, of B space and private money. Trying to making sure you have an avenue to get out, that kind of thing. So you want to
Yeah,
talk about?
and I wouldn't even say it's a con. I would say it's a con of the way that they're sold sometimes, right? And so,
Exactly.
there's our job as a broker is to try and do what you're asking us to do for you, right? And if that's to get to a house, our job is to try and help you do that. And so, but one of the problems that happens when we're doing that sometimes is when we're talking to clients, we say, listen, like, okay, you have a ton of cash, you don't qualify in a conventional way. You might have the 35% down that the private lender needs. So we can get you into that house this year, and it's a 1 year term. Or the alternative lending, you have your 21% down, and it's a 1 or 2 year term. But what is the plan after that? Because you
Right.
can't afford these higher rates to pay off a mortgage over the next 40 years. Like,
Right.
it's just not realistic, right? And so if I'm putting you in a house for 2 years, what are we doing over the next 2 years to bring you back into prime lending? And if you don't think that's realistic, what can we do? And what is our timeline to get you back into prime lending? And then you decide, do I even want to buy this place? Because there's a like you say, there's higher interest rates. There's a definite cost to going towards alternative lending. If you're working with a good and conscientious broker, it's very, very important that you guys put that plan into place right off the bat. And then once you put that plan into place, we can you can walk a horse to water, but you can't make it drink.
Right.
It's up to you as a client to make sure that you're following that plan to get out of there. Because I really think that that alternative space, private space, the vast majority of the lenders, especially in alternative and also in private, they're not out trying to take advantage of you and put you into a
No.
situation where they're gonna foreclose on your house. They don't want to be in the business of buying and selling houses. They want to be in the business of lending money, right? And so they don't want to be foreclosing on you, but you need to do the right things to make sure that you don't put yourself in a situation where you get foreclosed on, right, Mike?
Yeah, exactly. And I mean, like Jaden just said, the lenders, that's the last thing they want. They're going to try to work with you to try to make sure that, if you do miss a payment or something, to get back on track. Last thing they want to do is have to deal with the headache of foreclosing on a property, because it is a nightmare. But there's some really great B lenders. There's some really great private lenders. I've done a lot of, I've done more of private than B. Like Jay said, most of our space is the AAA. But there's some really good products, and every lender is different. Just like an A lender, every B lender is different on what they allow, what they charge, what they do on renewals, what they expect from their clients, vice versa. As is every private lender. There's so much money out there in private money. Sorry, there's so much money out there to lend privately. You just have to basically, I shop it just like I do for A lenders to try to find not only the best rate I can, but the best terms as far as the fees up front and the renewal terms. What are the renewal terms? Because there's no guarantee. If you get a private mortgage, a second mortgage or something like that, or a private first mortgage, that lender could say, nope, we don't want to renew with you. We need you to get out. And if your loan to values are too tight now, maybe values have dropped. You just things to consider, right? We need, like Jaden said, we have to have you on a plan where we can get you out of those higher rates and fees back into the A space, and then you'll be golden, right? So options to talk about. Great lenders out there. There's some amazing private lenders and B lenders that work awesome for people. It's just knowing your product. So
absolutely. So and if you're in that space where you, for whatever reason, don't qualify for a mortgage, but you have a bit of cash lying around and you think you should qualify for a mortgage, we're happy to have that chat. Please give us a call. Jaden in Alberta, Mike in BC. Talk through your options, and maybe your options are wait 2 years until you get your plan in place and then buy. But if you're in a situation where you need to buy right now, there are options for you. Call us anytime.
I love the plan, Jay. The plan is important no matter what. Whether you're buying, trying to refinance, consolidate debt, having a plan in place just is something that makes it that much smoother, right? So
absolutely.
All right.
So thanks, guys. And we'll see you next week.
Thanks, Jay. Have a good one.
You too, buddy.